Well, today we have a very different point of view once again about what's going on out there. And I will get into that in a moment. First, I'd like you to alert you to a blog that I wrote in mid-December. It's on our website. And it goes into why we believe that innovation is in deep value territory, and goes through and refutes a lot of what we believe are the myths out there about innovation. We believe that COVID-19, the coronavirus crisis, accelerated the shift towards the innovation platforms around which we have based all of our research. And I'm going to give you a few examples of that in a minute. I do want you to know that, of course, we've been through a very difficult time since the significant rotation from growth into value started nearly a year ago in mid-February. And I want you to know that we're in there with you between the company and ARK funds, which are more than half of my IRA, and the significant percentage of my total net worth. We're all in, and my conviction couldn't be higher that the innovation that has been evolving and was accelerated coming out of the coronavirus crisis is unstoppable. And the convergence between and among the 14 different technologies that we are researching, that convergence is underway now and is causing and will continue to cause explosive growth, really the likes of which we haven't seen in our lifetimes. And when I say explosive growth, I mean when it comes to those innovation platforms, they're going to cause a lot of problems for the underlying economy, the traditional world order. And I'll explain a little bit more about that in a moment. So what has happened is in the early stages of the coronavirus, when I was doing those videos, we had algorithms and quantitative strategies focused on just a few variables. They were at that time cash burn and cash cushion. And a lot of our stocks did not have big cash cushions and were burning cash, especially in the genomic space. And they were taken down by 75%, many of them, in a month, just in a month, 3 weeks to a month. And of course, that was the wrong answer. The algorithms got it wrong, and that there was a massive head fake, caused a lot of consternation for the quantitative strategies out there, because, of course, genomics was a big part of the solution to a problem we were facing in the coronavirus. I think we're going to see a lot of more hotspots in emerging markets, and the dollar going up suggests a flight to safety, and that is a downward force on inflation. Commodities are priced in dollars, the dollar's going up, all other things equal, commodity prices would go down. In the crypto markets, we're seeing a correction. They are starting to succumb to what we're seeing in the equity market, which is this strike against technology, growth, innovation. We think that's going to be short-lived. Blockchain technology. We think that we're in a period of innovation that was the dream in the late 90s.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
We have real revenues. We have incredible growth rates. And if we're right and the economy has an inventory problem, then our growth rates are going to look far superior to anything you'd find in the value space. And we are really looking forward to that. Talk about the fourth quarter GDP. It will be strong. Now, not as strong as some people thought. It was going to be up 7%, and now I guess the Atlanta Fed said it'll be closer to 4.3%. What we're going to be watching is how much of that is in inventories, and I think quite a lot will be. Now on to market signals. And I realize I'm spending a lot of time, but I just want you to understand how we're pulling apart the data, and we're seeing things that others are either not seeing or for some reason just not reporting. The yield curve peaked at 130 it was February or March of last year. I think it was March, and has been falling. Now, the yield curve is the difference between short and long-term interest rates. Normally, long-term interest rates are higher than short-term interest rates. They were, as measured by the Treasury curve, so government bonds and notes, the yield curve, the longer-term bonds were 130 basis points, 1.3% higher than the 2-year yields in March of last year. At the end of last year, that number was 80 basis points, 0.8%. Today, it's 0.6%, even though bond yields are up, short yields are up more in response to the employment report and that 0.6% on average hourly earnings. The yield curve narrowing generally is not a good thing for financial stocks, but this rotation into value stocks, energy's up 10%, financials up 5%, and they were two of the strongest sectors last year, seems to be on automatic pilot. This yield curve would suggest that financials should start to underperform. So we shall see. The rotation is still towards value. It is hurting growth. We think it's long in the tooth. We think it's going to end, but it hasn't ended yet. In the fixed income world, we're also seeing credit spreads. So we look at junk spreads. So how much higher are low quality companies' yields or interest rates than higher quality? And right now we're seeing no disturbances, very little. The fixed income market is buying into this rotation into cyclicals. They haven't been paying attention perhaps to inventories in the way we are. Commodity prices are quite mixed. Oil prices peaked in the early November timeframe, I believe it was, around $85, $86. They went all the way down to $62. So in the next couple of inflation reports, energy is going to be a negative. That's interesting. Iron ore prices are still down quite significantly from their peak, and that does corroborate with what's going on in China. But most are just meandering, most prices in trading ranges. The dollar is up, and that is causing all kinds of problems in the emerging markets. The Turkish lira, as I mentioned on our last video, the Turkish people have lost half of their purchasing power in 1 year. Relative to the dollar. That's the Turkish lira. It's gone from 7 to about 14. It was as high as 18, nearly 20. And I think it's going to go back there because their foreign exchange reserves were cut in half the last month to something like $6 billion. $6 billion is nothing to withstand the onslaught of the currency speculators. We're also seeing Kazakhstan, the protests there, shutting down the country's internet. I know Russian forces are in there. I think we're going to see a lot of more hotspots in emerging markets. And the dollar going up suggests a flight to safety, and that is a downward force on inflation. Commodities are priced in dollars. The dollar's going up. All other things equal, commodity prices would go down.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.